240 days. That figure itself has never meant anything to me until now over what I've actually just discovered. Let's go ahead and find out why. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so before we get to that 240-day metric that I'm talking about, let's go ahead and just take a look at a couple things here, right? Let me get rid of some of these trend lines that have nothing to do with what we're doing now. Okay, so we based on this falling wedge, this was one of the reasons that we were able to see the bottom side targets, okay? So, and particularly down to the zone of about, the last time I spoke about it was around 70.45, right? This right down here, right? So, or 70.66, whatever that is. So price action ended up coming back down to precisely 69 cents today before ripping to the upside. Okay, so this was a very, remember I spoke about two demand zones, of which would be the strongest demand zones that GTII has to offer, right? First, it was within this area here that had the space of about, the range of about 80.31 to the 70.45, right? And now the second zone being this lower zone down here that goes all the way down to 43 cents. Okay, so these, historically speaking, at least, both of these demand zones have actually shown some pretty significant upside. Okay, so what's interesting here is that if we continue, if we continue the price action the way we continue, the way we started today, we could be setting up a massive bear trap. Okay, and yesterday we were speaking about the floor potentially being found or found soon, right? So actually, I really didn't know that we were going to find it today before a huge upside, but the metrics from yesterday's analysis were kind of telling us that we may already be at a floor, right? So price action definitely made that happen. In 21 hours and 1 minute, we're going to be closing a bi-daily bullish engulfing candle formation, okay? So this is the formation right over here, and that happens when the forward candle, green candle in particular, is engulfing the prior red one, right? So in this case, you can see that we're clearly in the money to make this huge bullish engulfing. And just to be clear here, on the daily time frame, we've already closed a daily candle here and massively engulfing the previous red one. Okay, so this is already suggesting a continuation to the upside. Okay, so what I want to talk to you about here is very important because we actually, like I'm saying, that we probably set up a bear trap here, particularly the gain entry. Once again, we're regaining the entry here inside of this wedge, right? So which is very bullish. First of all, the bear trap can be looked at like this. This is the breakout candle here, this red one here, right? So we take a trend line from the top side. From the top side of the triangle all the way to the bottom side of the triangle, right? Actually, we can just make sure that we are touching the very top and the very bottom. Okay, so that would be our area of breakout. We take this trend line and we apply it right down here to tell us where price action can actually go to, right? So this would be the price objective in a psychological manner. This was essentially taking us to the target of 67.42, which has a lot to do with the 3-spot 618. So in other words, bears looking at this breakdown from a bullish formation, meaning that they thought they actually had it in the bag, leads the price action to potentially this target of around 66.48 psychologically and geometrically. So they're thinking they can cover down here, temporarily cause a little an upsurge right here to validate the resistance before a continuation to the way down to look at the targets from a trend line from the center of the triangle and then eventually a trend line from the top side of the triangle to the lower part of the triangle, which would just be, massively low, just really low. Okay, so in fact, this is why I'm saying that the bulls may have set that trap there. In fact, they didn't even let the bears actually cover position down here. So we essentially, or the bulls have essentially used the bears as liquidity for an upthrust here. Okay, so that's very strategic and very intelligent. So whoever actually put in those huge buy orders, that's That is a person who definitely knows what they're doing. Okay, so now that we know this, okay, now that we have this out of the way, first of all, look at the target here at the 2-spot 618, 88.59, and we're at 89.97. Okay, so we're literally just upside of the 2-spot 618, which is very good, meaning that we have a relevant support. Being that geometric level, right? We can also, add our moving averages. Another very important thing here is that on the bi-daily time frame, we are in the process of converting that SMA 10 into a support. We've been using that SMA 10, just mind you, okay? We've been using that SMA 10 since, since April 2023. We've been using let's just say it like this, actually. We've been under the SMA 10 since April 2023. Okay, so now we're finally getting a break upside of it, and there is a high potential here that we can convert it into a support. Okay, you guys, but now I've been waiting to talk to you about this, and something that I've actually discovered, the meaning of that thing of 240 days. This is so important. Okay, so first of all, let's go ahead and evaluate the timing behind all of this mess right here. Okay, so I'm gonna kind of retouch on the tools here that I have, right? So from this pivot here, right, from the major pivotal points, I'm talking about this area here because price action actually started going to the downside and eventually found a new bottom right down here, right? So the space of this top side to this bottom side here, right, you're looking at about 245 days, right? So now, yeah, it's right over here. I'm just going to repeat them again so that you can see that I am doing it, I'm doing it as close to what I followed here myself in my notes, right? So I actually didn't even write notes for this. I wish I did, which I'm just going to try to remember everything, okay? But I was too excited to hear. I really wanted to get behind the mic and show you this. Okay, now from this major pivotal point to the next low, right? So that would be this bottom side here to this bottom side, right? Which is the lower candle from both of these here. You're looking at 242 days, right? So this was a huge run like that, right? And we ended up catching that next pivot all the way to the downside here. Okay, so now taking into consideration that 897 top side that we faced, right? All the way to the current price action where we are right now, right? So let's just do it like that, right? So we have the candle at 897, that $9 target that we faced, to the candle where we actually just ran to the upside today. Look at that, 241 days. So it's very interesting that we are getting these massive runs every 240 days. So if that actually wasn't enough, then let's go ahead and pull it back a bit, right? So let's go historically speaking. Take a look at this. This pivotal point here from the very top side of this candle to the lowest part of the price action right down here, right? You can see that this wick would be the lowest one out of all of these. That is the space of, well, guess what? 244 days, right? So now I thought I had actually an outlier coming up pretty soon, but I don't think I did. Okay, so now from the top side of this pivot here, where we got a huge upside right there, and then we actually started capitulating all the way down to here, which was around literally 1 cent flat, like 0.100, right? So the space from that top side to that very bottom side is, yet again, what do you know? 241 days. Okay, now this is where I mean that I started getting one outlier here, right? So this from this bottom side to the to this pivot here, where we faced that upside before a retracement, that's 273 days, right? So measured just like this, you can see 273 days, right? So, but still within the 200-day period, all right? And then I started to think that there may be a deviation here, because from this pivot to this pivot, you have 209 days, but it's still within the 200 realm. And then I actually took into consideration this pivot to the lowest pivot down here, which was 457 days. But you divide that by 2, you have 238, right? So that's very curious, right? So another thing is, this is where it started getting a little weird. Okay, this is where I was like, okay, well, what does that mean, right? So from this major pivotal point to the the next candle here, the candle here that we actually faced as a capitulation, literally the shakeout before this 3,000% run, that is marking 819 days total, right? So divide that by 4 and you have like 202 or 203 or something like that. So it's rhyming within the 200-day period still. The reason why it's weird to me is that this is the entire run for 819 days that we faced before we actually started to make that massive killing to the upside. Okay, so just if you're curious over how, following the next monthly candle, right, the run that we got to that upside, go ahead and notice there. That's a 7,500% run to the upside. So that's 6 cents to $4, almost $5, 6 cents to almost $5. Okay, you guys. So that marks 819 days. Now, why is it weird? Well, let's take a look at the current period. From this pivotal point to our candle that we're about to close in 8 days, guess what? 822 days. I literally shat myself. I literally shat myself when I saw that. I'm like, no. Like, what could it be? And also the fact that we're retracing from a major demand zone. Not only that is that I've also found that we were using geometrics here all along. This is also on the monthly time frame. This is a falling wedge. We have from the golden rule of 3. We have test number 1, 2, 3. We capitulate on test 3. We break out on test 4. We come back and validate the area of the newly converted resistance into now a support, which, by the way, is happening again. Which is another reason we were able to tell that we could hit that 70-cent bottom, because of this resistance being turned into a support. We came right back down at it, right? So this is another reason we were able to see that 70-cent zone. Now, okay, all right, so one more thing. Okay, so here is the breakout, right? So this is the target that we can get for a price objective. You apply that to the candle breakout, which is right here. And look at where it takes us, right? The candle is that price objective psychologically is taking us to 793, which is very close to the 4-spot 618 at 808, which is very close to the price action that it eventually touched at 897. So geometrically and psychologically, all of it played very well. Now, in doing this research here, I found something else. My goodness, man. I really hope you're still watching here, because this is insanity, okay? I found that what we're trading in right now is actually a channel, okay? So, and pardon me, because I actually did extend it, I wanted to show you the extension afterward, right? So this is a channel, okay? So I'm just going to kind of put this back over here, because this is where I initially found it. Okay, so, and this is very particular because of the downside that we just faced. Literally, the crossing point is 70 cents from this bottom side to link both of these support touches here. This is now a validation of this formation here. 2 touches of the support, 2 touches of the resistance. Okay, you guys, so this is incredibly important. All right, so what I'm telling you here is that this is now following a very, very traditional setup. And I don't know that it's going to continue like this, but it's highly possible. This is an ABCD setup, okay? That's X for starting, right? This would be A. This would be B, right? And then we would do it again, right? So then we would go to C. And then the final one for the ABCD strategy is, of course, right over there, right? So this is just to imply what could be happening. Please remember that this is the monthly time frame. Every candle takes a month to close. 8 days, 21 hours to close the present one, which is very curious because it's at 822 days from the 819 that we looked at down here before we started making a huge run to the upside. Ridiculous. Okay, you guys? So I'm wondering, I'm very curious over what could be happening here. Okay, so now, I moved this channel. Away, right? So let's go ahead and link that channel to that bottom side that I spoke to you about, right? Right over here. So we could see that the top side was always 897, because putting it directly from this top side of this candle here, meeting the range of this top side from that 7,500% run to the $8.97, that's a perfect regression. Okay, and now since we do have a regression, and now this triangle marking that bottom side, right, that now also gives us the support touches. We now have support from this channel. Okay, so this is I'm sorry, it's getting a little convoluted here, right? But it's important for us to kind of look at this, right? So now it's safe to say that, you know, we can kind of get rid of this and get rid of this and focus on the current trend, which is this. And by the way, it's a massive trend. Okay, you guys, this is just as equally dangerous to the upside as it is downside. Okay, you guys, so which is very important. This trend is incredibly important. Why? Because this is now suggesting that this is the bottom side of the current trend. Out of what? An ascending triangle in a macro scale. And this is the breakout. Okay, these 819 days are the breakout from these 819 days. So now we're validating the top side of this ascending triangle, which is a bullish formation. Okay, and yes, there are several targets to look at here too, right? So remember that these are just, this is just per the trading book rules. Okay, I'm not saying that we're going there because some of these targets may get too many people excited, right? And I don't want you to do that. I want you to practice the data. Okay, practice whatever's available to us, and that's it. Okay, so applying that metric to the top side here is suggesting a top side of 1388. Okay, that's from this. Okay, that's from this side. That's bull set number one. The bull set number two would be to the center of the price action. Right, so that would be another trend line to consider. So let's go ahead and say that it were from here to here, right? So now we apply that as well. You guessed it. We apply it to the very top side, and this is suggesting a top side of about $39. And then there is one more target to look at. Okay, so please remember this is just highly speculative, right? So from the very top side of the triangle, right, to the very lower end of the triangle, right over here. And in fact, I think I could actually make a little bit of an adjustment. Here you go. And that topside target is leading, of course, to a pretty massive upside one, right? So this would essentially take us to about 149.52. Yeah, guys, remember that I don't mean to sound like I don't mean for this to be like a sensationalist claim here or anything like that, but it's just, that's just how you trade this triangle, right? That's just the way to trade it. You get 3 targets for it. Not all of them have to meet. And not any of them have to meet, by the way. Is just, you know, we're kind of there, right? So this is implying several things. And now please remember that I'm using the top side of the target because there is this as well here. Usually I tend to have a range of resistance when I'm looking at ascending triangles and also descending. Okay, you guys, so that's the price action could actually be led to a slightly lower target, which could make sense. Okay, so let's adjust it real quick, okay, because we have to finish this video. It's going on too long. Okay, let's take it from here instead, from the breakout candle, which is this one. Okay, let's go ahead and apply that trend line to the very bottom side of the triangle there. Okay, and then we can apply it to the breakout zone. All right, so now if we're, oh, you know what? It's actually this candle right here. Sorry about that. Let me just go ahead and put it, this was yeah, whatever. It doesn't matter. Let's just go ahead and take a look at that price action. So that's taking us to around, let's see, to about $6.45. And the high of this candle here was $5.44, okay? And now the opening of this candle here was, let's see, $5.77, okay? So all of that is kind of rhyming within that same zone. And in fact, the 3-spot 618 was located at 643, meeting this upside target pretty closely. So that's what I mean. It's just slight variances here and there, right? But just know that you do have 3 targets to look at when you're looking at a macro scale formation like this. Let's move on to the last part of the analysis, guys. Okay, so another thing to look at here is on the 8-hour time frame, I have found 2 independent drives. Okay, so this drive here is the yellow drives. This is the opposition of price action versus momentum, which is divergences. Okay, so the divergence you're looking at, particular to the yellow line, is a regular drive of bullish divergence, validated. Okay, validated upon this price action today. The pink line or the purple line, that is another confirmed drive of hidden bullish divergence. Okay, so these are very, very far away from each other, but they're absolutely in play. And we could have been able to see this if we were to focus in on the 8-hour chart starting to make a pivot there. Okay, but I mean, I'm not going to lie, this is ridiculous. It just went straight to the upside out of nowhere. Right, you guys? So this is good. We have validated this formation here. And in fact, there is another setup of volatility versus momentum on the 6-hour, which I have to calculate. Okay, you guys, so if we're going to be looking at the multiple time frames here, then let's just go ahead and consider that real quick, right? So this is the bi-hourly, this is the 6-hour, this is the 12-hour, this is the daily here, this one here is the bi-daily, and this is the 3-day. Okay, so in respects to the 3-day, we have a little bit of resistance coming up, but remember, this is 3 days, and also this is a 5-day. Okay, so in respects to this distance here, it's pretty large. Okay, this is not the distance that you would look at in relation to a time frame like the 30-minute. Okay, because this can be dollars. It can be several percentages to the upside in resistance, right? So, but the thing is here is that just like I said yesterday, we need the 30-minute time frame to pivot enough to the upside, strong enough so that it can start making or influencing the upper time frames, and that is exactly what happened, and that is exactly what this example is. So if you want to see the video from yesterday, go ahead and refer to it, and you'll hear me talk about how we need momentum to start acting, and this is literally what we're getting just based on what we said yesterday, right? So this is a good thing. Now, one more thing that we want to do is actually load our master layout here and look at GTII, because this is a good way to see momentum versus volatility. It's very important. Okay, you guys, so let's go ahead and kind of look into that now. Starting from the 4-hour time frame, notice how we have volatility expanding from critical volatility, and we have an upside pivot right there on stochastics, right? That's what I meant. I meant that we need the 30-minute and the hourly to show exponential upside so that we can start making the upper time frames, we can start influencing them, right? So in this case, yeah, we got that upside here on the 4-hour, 6-hour time frame, also suggesting an upside, 8-hour time frame, also suggesting an upside, which, by the way, they're all coming out of critical contraction, meaning no volatility to yes volatility. So all of these time frames, contraction to expansion with upside on stochastic momentum, all of these are statistical plays now. And this is increasing volatility on the 12-hour with upside pivot on stochastics. Daily time frame, increasing volatility, upside on that stochastic momentum. Guys, this is ridiculous. Okay, so yeah, we are. There can be a lot of messing around here, right? But if we are to succeed upside of the EMA 21 here, let's just look at the daily. If we are able to succeed upside of the 92-cent zone, then the next target here is actually pretty substantial. The bounce from here would be at around $1.17. Okay, of course, that's where the moving average is, but we do have another relevant area of resistance at 102. Okay, this is that very famous 102 to 101 that we were talking about when we were there. Okay, so just, expect a potential retracement from the area of about 102, potentially test the EMA 21 as a support, continue on to the upside to eventually face the resistance between, I would say, the zone of 119 to, I would say about 127. 119 to 127, if we can continue this very bullish price action, right? Just like this. We'll go ahead and mark it off here so that we know that we do have something to look out for, right, on the master layout. All right, you guys, sorry that the video took this long. It's just I was very excited to explain to you in depth what I was seeing, okay? So remember, first and foremost, that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool, okay, you guys? But with that said, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios.